Hi, I'm Heather, reporting live from Fintech Futures for Money2020 USA, and I'm happy to be joined here with Dave from Forum 3. Dave, welcome.
Thank you, Heather. Appreciate you having me on.
Yes, absolutely. So you are CEO of the US here for Forum 3, and why don't you start off just telling us a little bit about the company and your background and how you got into Forum 3 and working with changing payments.
Sure. So I joined Forum 3 in about 3 years ago now, hard to believe, to start up the US franchise. Prior to that, I had been with Swift for a number of years as the chief exec for the Americas UK, and before that I was with Barclays. So I've been in the payments industry for quite a while. Forum 3 started in 2016 in the UK to really create a solution for large banks who are looking to connect to the local payment systems, which I know sounds kind of basic, right? Every bank has to connect to its payment systems. But I think what Forum 3 has done is really revolutionize how they do that, rather than creating proprietary connections to the faster payment system in the UK or SEPA in Europe, or in the US now, FedNow and RTP. They can simply connect once to us, and then we leverage a platform that I'm happy to go into more detail on, that then connects into each of those gateways globally. So we have a number of large banks as clients, and have been very successful in the UK, but again, just starting to really branch out into the US and build momentum here.
And I do want to get into detail on the platform and technology, so let's start big picture. As you're looking at the US market, instant payments is evolving quickly, but where do you see it right now, and where do you see it coming in the next?
It's still quite nascent, to be honest with you. I mean, we've had RTP as an alternative for, I guess, 6 or 7 years now, if my math is correct. But we really haven't seen massive uptake, and I think that's partially because we haven't seen the kind of killer use case evolve yet, right? And I think it's also partially where we've seen rapid uptake in markets like Brazil or India, right? That has come off the back of regulatory mandates for the banks to adopt these systems, and then I think a real push to push consumer activity through those systems. We haven't really seen that in the US, so I think we're still waiting for that killer use case.
So as it has launched, I think some of the use cases have been surprising or not as predicted. Where are you seeing the most successful use cases right now?
I mean, certainly in the salary and wages category, there's quite a lot of activity, right? Both for the kind of quote unquote gig economy type payments. People want to get paid at the time of delivery of service. We're also seeing a number of traditional kind of payroll vendors starting to look at RTP and FedNow as a means to execute one-off payments, so termination payments or reimbursements for specific things or what have you, things that fall outside of the natural payroll cycle. I think that will continue to pick up. But I think the really interesting thing are things like point of sale, which are a long way from really taking off, but we're starting to see things like there was a recent announcement from Walmart, I think it was last week or the week before, around using account to account and offering differentiated pricing to do so as an alternative to card payments. That type of mentality, right, and the avoidance of interchange fees could help drive more adoption of real-time payments, I think, in the US.
I could. What about on the consumer side? What is it going to take really to adopt that and to see what happened there?
I think people need to get comfortable with paying from their account, right? In the US, we are definitely hooked on the air miles concept, right, and points systems, and I think that probably will remain in place for the foreseeable future, unless and until there is more pressure on interchange fees and the credit. It's what we've seen in Europe, for instance, right? As pressure has increased on interchange, I think we see more shift to account payment methodologies, and I suspect that's what will be required in the US. I don't know if, I think we're a long way off from breaking that cycle, though, to be honest.
Yeah, it's a little early to read the tea leaves on that.
It really is, because I think it is the home of the card, right? And I think where other economies kind of leapfrogged from cash to account payments or real-time payments, they didn't have that embedded card ecosystem to the extent that the U.S. does now.
But ultimately, it's businesses where banks get a majority of their deposits. It's where they have a lot of their success. So what do the bankers need to do to prepare for faster and instant payments?
So I think they need to connect, first of all, right? So there's still a huge number of banks that haven't connected to either system, or have done so with very kind of simplistic kind of short-term solutions, right? And I think ultimately what we're hoping, and certainly what we're pitching as a solution from Form 3's perspective, is you need to think of it as a rail that is open to client activity in the same way that ACH or FedWire is today. And to the extent you can make payments fungible between those rails, that's when the kind of the magic is unlocked, right? So we on our platform have created some pretty sophisticated intelligent routing capability, and we take in all of our payments through a single API. And what that allows us to do is effectively treat payments as kind of fungible assets on the platform, rather than as simply a FedNow payment or a FedWire payment, right? And that ability to kind of intelligently route between rails, I think, is critical to the banks really getting the most out of what FedNow or NRTP can offer vis-a-vis FedWire or ACH, so that it allows people who are looking to serve their clients and gear for value to continue to use ACH, but to gear for speed, maybe they want to use FedNow, or gear towards where the end beneficiary is ultimately addressable. Sorry, I wandered on there, but go.
No, it makes sense. So while we said that we're not disrupting credit cards right now, this is going to impact other payment infrastructures. What kind of bearing do you think it's going to have?
Well, I think it's going to, banks are at this kind of inflection point, I think, where they're having to adapt for ISO 20022. They're having to adapt to real-time payments. And I think that wholesale kind of look at payment infrastructure is something we're seeing as a commonality across all banks. I think all banks are at different stages in that cycle. Most are kind of just starting, but looking to adopt new technology to accommodate for all of those various payment types seems to be a consistency that we're seeing across all the banks. And I think leveraging things like APIs, like microservices, the cloud, right? They're all kind of table stakes, I think, for new payments architecture as banks look to implement new systems. And that's certainly we hope that's table stakes, because that's the environment that we operate in ourselves. So,
Absolutely. So let's look a couple of years into the future. While this is all, the use cases have taken off, things are moving actively. There are implications that we should also be prepared for downstream. What do you see, and how might this impact fraud and liquidity?
Yeah, I mean, it's interesting. Fraud is obviously a big concern in instant payments, particularly because of the irrevocability of the payment, right? Once the payment's out the door, that's it, right? I think what's interesting and sometimes gets lost in the fraud discussion is, because we're dealing with richer data sets, right? It does allow for a higher level of analysis to be performed on these transactions as they're going through, right? So we are embedding fraud analytics into our real-time payment platform. We work with a couple of different AI companies to, it's a perfect use case for AI, right? Massive data set, you're looking for patterns. You have to do it very quickly because we have to do it within the payment time frame, but it's a great application. I think what we're also finding, though, is the dirty secret about traditional payment types like ACH is there's still rampant fraud in there. It's just very little you can do about it when you're dealing with bulk processing of mass files, right? And what we're now looking to do is break up those ACH files into discrete payments so that we can run them through the same gauntlet of compliance and fraud checking that we've already built for RTP and FedNow. And I think, again, leveraging modern architecture to do that, I think is critical.
there's a lot that will be evolving and changing with fraud and all of these pieces around the customer experience, customer education. What do bankers need to do now? What should we expect in the future with user experience?
Okay. Yeah, I think the example that we've seen set in Europe in particular, right, and in the UK, is that there's going to be an increasing onus placed on the banks themselves to educate their customers about fraud, because they're going to be responsible for reimbursing them for fraudulent activity, right? And I think what is so difficult for everybody involved in the payments ecosystem, whether it is the customer or the bank or the end beneficiary, is so much of the fraud is reliant simply on lack of awareness and understanding of some of the types of fraud that are being run in these systems. So there really is a massive educational piece that I think is needed to help bring people up to speed on what they should be on the lookout for. But I think there is a role for technology to play in terms of creating flags and recognition of patterns to educate, in order to kind of put a mirror back to the customers to say, and we're seeing this already, are you sure, right, this is a new payee for you, right? Are you sure this is an anomalous amount for you? Are you sure, right? And I think you need to embed that in the technology to create those flags and the ability to kind of advise and work with clients to identify fraudulent patterns.
I think businesses and people in general appreciate that.
Absolutely.
They're used to the user experience. It's not cumbersome for them to make sure that you're safeguarding them. They want the bank to protect them.
Yeah, and I think everybody has the same enemy, right? And that is the fraudster themselves, right? And I think customers and banks working together and other financial services firms working together to identify that fraudulent activities in the best interest of everybody.
Well put. We're all in this together.
Exactly.
Gotcha. Well, Dave, it's been a pleasure. Thank you for making this happen. And I'm excited about what's to come as this picks up in momentum and for everything in the future of Form 3. We hope to hear from you again.
Cool. No, I appreciate the time and the insightful questions. Thank you, Heather.
Thanks.
All right.